I always say that the best thing about consulting are the people that you work with. You're always working with the best, pushing each other to learn more, do more, be more, and go even further. Which is why I'm very excited to be able to go through these conversations with some of our alumni who've gone on to even greater success beyond their consulting career, and learn from them about the high points, the low points, the achievements, the wins, and the lessons that we can all take and apply in our future journeys. Tarek Kabrit, CEO of Seez. Welcome to Unscripted.
Thanks for having me. Quite excited.
So usually on these talks, we start with sort of the sequential, the whole journey, the unscripted journey, the alumni journey. But in your case, there's very big news that just happened because your startup Seez has just been acquired for 46 million euros.
0.2.
0.2, very important. Yeah, every cent counts. So congratulations on that. It struck me that when you hear these kinds of headlines, if you don't know the person or the story of the company, people just jump to us because, oh, he made the startup and now he sold it, and isn't it great? Must have been fantastic and easy all along the way. But I know for a fact that it actually has been a very difficult journey. There's been pivots, there's been times where you're close to bankruptcy. So give me a sense of what this journey, the entrepreneurship journey with Seez has been like for you.
Yeah, absolutely. So we started out Seez initially as a mobile app for buying cars. And we had two main features. We had image recognition. You could take a picture of a car, we tell you what the car is. And the second thing is we had an AI chatbot. That's 7 years ago, before they became cool again now. That would actually send WhatsApp messages to the sellers of the cars, negotiate on your behalf, check if the car is in an accident, warranty, and all that. So we built that version of Seez. The app did pretty well. We got to 2.8 million users. It was number 3 on iTunes, number 5 on Android, all that kind of stuff. And then COVID hit, and we lost 84% of our revenue, like almost overnight. Our revenue was basically based on marketing budgets from dealers. We were providing analytics and insights and all that, and suddenly just stopped. So very luckily, we had just raised a $6 million round in February 2020. So March came, revenue dead, we had cash in the bank. So now we had to decide, do we just conserve the cash and extend our runway, or do we change what we're doing? And no one knew how long the pandemic is going to last. No one knew what a pandemic is, and then no one knew how long it's going to last. So I was getting mixed signals from our investors and board in a very light way. Like they would send me a WhatsApp message saying, oh, look at this startup. They just cut their cost by 80% or something like that. So yeah, maybe you should do that kind of thing. Hint, hint, wink, wink. So I felt if we don't evolve at the end of that and we just stay exactly the same, we're not going to have a good enough story, because we won't have any growth, obviously. So just cutting costs and being alive at the end of it is not going to give us a story where we can rise and be in a better place. So we decided not to cut costs and to actually keep spending, but we shifted the entire business. So we pivoted effectively from a mobile app. At the time, online car buying was booming a lot. There are two big companies globally, one called Carvana in the US and one called Kazoo in Europe. Carvana is the fastest company that gets to $70 billion like in 6 years, faster than a lot of the big guys. And Kazoo was the fastest unicorn ever in Europe. And they sell cars online, basically. So we felt, okay, this is the direction. The world is shifting digital. Amazon was having their best year ever. All the online retailer were doing that. So we decided to shift into that world, and we decided to launch Seez.dk, which is the first digital marketplace in Scandinavia for cars. Our co-founder is Danish. There's a long story why Denmark, but we decided on Denmark. And we launched it in Denmark. Everybody said, oh, don't get into retail. You guys are the app guys. What do you know about retail and logistics and all that? And then add to it, it's a car. It's not shoes, right? So we got into that, for better or for worse. And we bought our own trucks, and we were like delivering cars and returns, and you get things you don't even think about it. Like you think, okay, I'm going to deliver a great experience, all of that. But then someone returns a car. You're like, oh crap, where do we store that now? We didn't even have a place to store the cars that are coming back. So we had to learn all of these things along the way. It did pretty well. We got to around 16 million GMV, like cross merchandise value in the first year. But like every marketplace, it's a unit economics game, right? So, the customer acquisition cost at some point needs to be less than the lifetime value of the customers. And it usually takes 2 to 3 years for a marketplace to take off and flip. So our plan was, okay, let's go raise a big funding round and keep marketing, grow it from 16 million to 100, 200. So we went out to raise a funding round and we got a term sheet from the biggest hedge fund in Denmark. It was a $7 million term sheet. Our existing shareholders said they'll put another $3 million, and it was an $80 million valuation. We're like very happy. And then last minute, like after all the due diligence was done and all of that, there was the Silicon Valley incident at Silicon Valley Bank, incident. I don't know if you remember that. And they pulled out. And we didn't have any cash. We literally had like a month and a half left of cash. We went back to the old shareholders, say, are you still good for the 3 million? And they're like, no, the 3 million was part of it. 10 million, 3 million is not going to get you anywhere in a marketplace. It can't pay for marketing. So there's no more money. And that was honestly the toughest period for me personally and for the company. We're running out of cash.
This is, you had invested how many years of your life in the...
By then, I had put like 5.5, 6 years into it. And yeah, suddenly we're like running out of money. I remember I had a meeting with my co-founder in a coffee shop. We're sitting. It's literally like, it sounds like a made up tree on a napkin. And the thing we wrote down, okay, by this date, if we don't get the money, we're going to let everyone go. We pay them this much. This is how much money will be left. We'll return it to the investor. It wasn't even added, like $100,000 would be left, right? And it was really sad. And then I went and I spoke to I knew most of the VCs. So I went and I literally reached out to every single VC I know, I don't know, and over 60, 70 VCs probably. And we didn't get anything. And yeah, that was a pretty low point for Seez. And for me personally, like we've had ups and downs along the way, but I think that was the hardest one for me. The VCs felt like we carried a lot of baggage. We're like, weren't you the mobile app guys? Or now you're doing this? Like, this is very different. And they just didn't appreciate the pivot in a way. They felt it's a drawback that we pivoted.
If I were to ask, so obviously if I asked you today, are you happy that you stuck with it? The answer is yes, because you just had a great acquisition. If I had asked you at that moment when 70 VCs had said no to you, and it's looking like it's the end, and it's 5, 6 years of your life, what would you have told me?
So listen, the experience and the learnings, I would take that. I would still do it, even if we had to shut down then. But yeah, it wasn't good. Like it wasn't a fun experience. And like you said, it's easy now in retrospect to say, okay, that was good. I'm glad we stuck with it. Something that one learning for me, if I ever get into VC again one day, is I felt most VCs, at least the ones I spoke with, really didn't value companies or founders or entrepreneurs that pivot. I felt it was such a negative thing that you pivoted. But you pivoted, At the same time, those same VCs really value second-time founders, even if you fail. It's almost like irrelevant, right? It's like second-time founders, best, like they literally have algorithms that scan LinkedIn to find second-time founder words, right? So they can reach out to them. And I didn't get it. Like in my head, I'm like, pivot is like you went through the same journey as a founder who shut down at some point, but you actually stuck with it. So it shows a little bit even more grit. For me, the reason I stuck with it, to be very honest, is our old shareholders and investors put their trust in me. And
it becomes a personal commitment at some point.
Exactly. And I felt like I can't just like shut it down. And it would have been so much easier to just shut it down, and not shut it down as in like give up. And so we could have shut it down, raised the same money we raised, and start same identical company, and we own 100%. So from a pure logical financial perspective, it was a much better decision to do than to keep dragging all this baggage that we've had for 6 years and try to justify and all that, right? But we didn't do that, and I felt it's a plus for a founder that actually decides to pivot, and it shows you adapt, you're like a lot of good things, right? It comes with a couple of negatives, which usually companies that pivot come with a higher valuation just because they're, but we've raised 20 million already, we can't be worth 15, whatever. And it comes with founders that have been diluted, like enormously. Both of these can be mitigated. You can have a lower valuation. You can give ESOP to the founder. So
Comes the technicality.
exactly. So for me, I felt like, why aren't they appreciating that?
And so that's the VCs, the friends or the family along the way, the ones who doubted.
Yeah.
What happened to the relationship with them?
So I have a lot of close friends who are investors in the company. I have 3 ex-Booz guys actually. So I have Fadi Abid, Ahmed Yusuf, and Ziad Faris who are investors. Small amounts. Fadi has been like, instrumental to the whole journey. Like he's a supporter. He's on the board. He markets the company better than I do even. So yeah, those people when the times were bad, I mean, they obviously don't know how bad things are. Like, you're going through a fundraise, you can't raise money. Every other founder in this market is not raising, so they don't understand. Guys, like we're 1 month away from shutting down, right? So yeah, there were doubts. I mean, and you get the hard ones like, why are you still doing this? Just stop. Look at your health, look at your whatever. And then you get the softer side of it is like, how much longer do you think you'll keep going before you decide to change direction and all that? So yeah,
That's a tough part of being an entrepreneur as well, right?
it is very
When everyone who's close to you who is probably saying it because not because they doubt you as in negative way, but because they
care about you.
they care about you. They think they
Absolutely.
want something better for you.
And you start thinking like, because while you're in it, perseverance and pushing feels the same whether you're delusional and crazy and you shouldn't be doing it or you're actually going to make it at the end. But like while you're in it, you can't tell, right? Am I crazy for believing and trying to keep going, or am I just like wasting time? And it's like those people who invent some crazy product and they keep putting their life into it. Like, man, like you can tell it's crazy, but when you're in it, you don't see it, right? So it's hard to see which one you are. So anyway, long story short, we decided to do a down round, what they call Startup World, which is a lower valuation, much lower than the previous one. And our existing shareholders, a couple of them actually decided to back us and put money. So we took that, we raised $3 million. We went down to 15 million in valuation from 80. So we took those 3 million and decided, okay, we can't do a marketplace for $3 million. You can't do much with that. But we were building a lot of software for our own marketplace. So a lot of tools and all that. And we're like, how about we pivot again and actually change the company into a software company? It doesn't require as much marketing. It's recurring revenue, high margins, sticky business, all these good things. And at the time, the music stopped like in 2022, 23, where everybody prior to that in Startup World and BC was pushing for revenue. It was a revenue game, revenue growth at all costs, blitz scaling, all that kind of stuff, right? At that point, everyone shifted and it became like a profit game. Like, okay, when will you be profitable? How profitable are you? Whatever. So we had to play that different game at the time. So we shifted into SaaS and the company became sort of like a Shopify for car dealers. So we take them from offline to pure online. And we've always been doing stuff in AI, whether the image recognition or the bot. So we kept doing more stuff in AI. And within a year, we took that 3 million and we 10x'd it. So we increased the valuation to 45 million. And then that AI tool that we're building, it's a chatbot and all that, really took off. It was one of the few, if any, in the world.
You're definitely ahead of the curve on that one.
So we got really lucky, like we're in the right place at the right time. And we rode that wave beautifully. And within 8-9 months, we expanded into 16 countries. Our revenue grew from 0.7 to 4.5. We're going to be profitable in 5-6 months. Valuation obviously went up. And we raised another 4 million. By end of this year, we're going to 10x that again. So we're like, it's we've done it a couple of times now. And we got 4 acquisition offers from global players, like huge global players. We even got, while we're managing those 4 M&A offers, we got VCs, inbound international VCs for $20 million worth of actual term sheets from 4 VCs, which we weren't even raising money. Suddenly everything changed. And like a year ago, like we're still the same people, same company, just the world changed and perception changed and AI took off and all that. So yeah, we've gone through a really low period. This last funny story, the last 4 million we raised, we're running out of cash. We weren't feeling like our metrics were really good. We knew we can raise money, but we were running out of cash. It got so bad, the last month we didn't pay salaries for the management team. Even took loans from our employees. They actually lend them company money so we pay other people money. And at the end, we got the term sheet, everything's done, the agreements, and we needed to sign them. We have a lot of shareholders because of our thing. We have like 30 shareholders. So we had to send these DocuSign, they call them envelopes, right, for signature. And if you send more than X number, you have to pay like $12 per envelope. I had maxed out all my personal credit cards, my wife's cards, all that. And then when my teammate, she was sending the envelopes, at some point she's like, we need to pay $300 and all your cards are not working. Like, what do I do? So we literally, the money was there, like 4 million that you can take, but we need to pay $300 to get it. I didn't have 300 left at the company. So yeah.
I'm glad you figured that one out.
Yeah, and that one way was easier to figure out than the other stuff.
So when your wife's credit cards are also maxed out, what's the conversation that's happening at home?
Yeah, I mean, honestly, she's very supportive. But she knew the money's coming, and but throughout the journey, she's always been. It's easy, when you come from a relatively higher paying job and you're doing this, and your salary is cut. For people say, like, especially when you're going through hard times, and she wasn't like that. She's always been, supportive. Not complaining, not pushing me, and to get out of it. And
It's always an underappreciated aspect of what
Absolutely.
makes an entrepreneur keep going. I think the ecosystem around them, or the support system.
The flip side of it is there's supporting you, and then there's the opposite. There's like not supporting you, and you can't do it. If someone is pushing in another direction, it becomes so overcharging.
And as you're describing all of these, bankrupt, borrowing money from the employees, we pivoted a couple of times. You're doing it with a smile on your face because things turned out well. But at the time, was there self-doubt? Was there, what am I doing?
Yeah.
I shouldn't have gotten us this far. It's all my fault. Do you go through, because I hear a lot of stories from entrepreneurs who blame themselves a lot
Yeah.
on what's happening.
So there's always self-doubt. There's self-doubt when things are going well, and there's self-doubt when things are not going well, like imposter syndrome kind of thing when things are going well, and there's guilt when things are not going well, right? So the borrowing money and all that, I only did it in this last round because I knew the money was coming in. In the older times, I never would do stuff like that. Like we're never late on any salaries, whatever. So for me, I obsessed about like making sure the employees are okay as they can be with the company that almost went
A
bankrupt.
roller coaster.
Yeah, but like financially, I would never risk anyone, and that was a problem for me. Like because when things were going well and we were like growing, I had so many of my friends, ex-consultants who wanted to invest and put money and all that. And I would really push it and delay it and do a lot of that. And the reason they would think is like, oh, why don't you want to take our money? Is like, it's like you don't want us to make money. And it's the exact opposite. Because for me, I always feel like we might go bankrupt. I don't want my friends to like it's
I want my friends to stay my friends.
Exactly. Like you don't want people, So for me, that was the reason, like why I wouldn't, take money from friends and all that. But like, yeah, you're very protective because you also feel like it's so volatile and risky. Like we went from like 6 million to 16 to 34 to 80 down to 15 up to 40, like it, and in between there's a few zeros, right? Like so it's it's a crazy ride.
Yeah, I think it's good for people to hear it from the inside as opposed to the whole it is on the magazine cover and it's all fantastic.
It's tough, yeah. I mean, right now, thank God, like most of our investors got their money back. A lot of them did 100% IRRs. I got some cash, like so it ended up on a positive note. But yeah, a year and a half ago, it could have been zero. Like
So what now that you've done the acquisition, it's been acquired, I guess there's a time period for the transaction to complete and so on, investing, etc. But what does that mean for Tarek in terms of what's next? Is it stay and grow it? Is it no, this technology is changing everything in the industry and I need to be looking for the next big thing? What's the mindset now?
So I'm staying with this company. So they'd like us to stay on board. They've incentivized us like to keep going. There's a lot to do. I think a huge part of defensibility of future and on the AI side is getting access to proprietary data that OpenAI and these guys don't have. And the company that bought us is strategic, and they have a lot of that data that no one had. So we're quite excited to see what we would do with it. After that, I don't know, I was having coffee with a friend this morning and was talking about this stuff, like what's next after that or whatever. And he sent me a thing like on WhatsApp, like literally an hour before I came here, and it said something like, don't think about what you want to do after this is over. Think about who you want to be after this is over. And I really like that. Like it's basically, it's a different way of thinking, but it's more internal and all that.
So does that mean you have to go and think about it? Or when you read that, you said, I know exactly what I want to be?
I have no idea. To be honest, like it's one of the things I was also talking to them about, like when you do this for so long, you have to obsess about it. Like, I mean, like insanely obsess. If you don't, I don't think you can be successful without obsessing. When you do, it takes over your mind, at least I won't say your life, 100% of the time. Like I can't spend, and I'm not even exaggerating, 2 minutes of my life without thinking about it. It gets starving after a while, right? But then 8 years in, when you come out of that, I don't know what I like. Like, do I still like the stuff I liked 8 years ago? Do I like different things? Because I've never had to explore. I didn't have the mental capacity to explore that, right?
No, that totally resonates. A friend was showing me this. He had set up this new space out in his home, like in the garden. And in one part, he had like, these are the tools because I like to do DIY. And these are fishing rods because I like to go fishing. And these are knives because I collect Japanese with swords and stuff. And I was thinking, if I were to build that today, I wouldn't know what to put in it.
Some PowerPoint decks here.
Some laptops. That would be a very boring word to say. We should definitely strive to have a more interesting personal space, right? Okay, so Switcher's interesting. The startup journey was ended up well. Let's go back a little bit to the beginning. So if I want to summarize in big stages, if you like, there was a consulting was the starting point. I think then it was investment banking, then it was private equity, and then we went to something that always in these conversations I like to figure out how deliberate or how coincidental the journey was. And even in your entrepreneurship journey, you mentioned, for example, Denmark is because you told me before, it's because you have a relative who happened to be Danish, who happened to be techie. So that's the whole reason you started in Denmark. So how much of the journey was you deciding, yes, I want to get into this, now I want to shift there?
You know, you asked me when we spoke before, like, why did you do it? And why would you move into that? And I thought about it like this morning while driving. I don't think I have a good answer, to be honest. Like, I thought of something which is funny. So I'm Lebanese. I grew up in Lebanon. There was the war. So a lot of time there were like no electricity at buildings, right? I don't know if you're the same, but like you'd go up the stairs because there's no elevator when you're a kid, right? Like that's the thing, and go up and down the stairs. And always on the way down, the last 2 steps, I would jump, right? And then one day, you know, in my life, you do that, like probably every kid in Lebanon. I'm like, can I do 3 steps, right? So you go and you do 3 steps, and you do that for the next month. Becomes your, you know, like your bar. Then one day, and you're like, can I do 4 steps, right? And I feel it's a bit of that. Like it's there. The steps are there. This is why do you go up one more step? Like you can even argue you shouldn't. Like there's no good reason to do it, right? But it's there, and you're like, can I do it?
Is it the new? The 3 steps are. I've been in a job for 3-4 years.
I don't think it's the new
something. What is it? The challenge? The
challenge. I think
change of environment?
can I do it? Like it's more like, can I do it? Like because from the first day I joined a job, I'm like, okay, I want this is the next thing. Like
From the first day, you decide where
I think Fadi was on your podcast.
Yes.
And he said something similar. Like we both joined on the same day. Actually, it was me, him, and Ahmed Yusuf.
Oh, you were the other guy.
I was the other guy, and he said that.
Now we're getting meta in these podcasts
yeah.
where the podcasts are connecting timelines.
Like a Netflix series.
But how do you decide what's the point? I mean, okay, it's one thing to say 3 years, whatever, but what's the trick? What are the conditions that are prompting
Triggers you to
the trigger? Yeah.
That is the part that's totally, I think, is for me at least, was not deliberate. Like it's you see a car and you see someone calls you and says, I have this. Like when I was at Deutsche Bank, I had an ex colleague of mine at INSEAD. He was like, we're starting a private equity company, and there was like literally 2 or 3 in the whole region at the time, and I want you to come in as a principal. I was like an associate at Deutsche. I'm like, All right, great. Yeah. Let's go, right? So sometimes it's
Okay,
like
so a mix. You had a general direction and
you have the itch,
and knowing that you're
you wait for the trigger.
But then where does the entrepreneurial thing come from? Because it's not there.
No,
It's in the beginning.
but it's actually for me, like I viewed it at least as out of all these careers, like as the ultimate reality. It's like, can I build something from scratch
On my own.
on my own? And it wasn't about can it be successful, but just like from zero, there's nothing, and then you build it. And at the time, we were building a mobile app, and always consumer businesses are more fun. Right now, we're not doing consumer, but it's always more fun because it's more relatable, right? For me, at some point, we're like, wow, we're building an app. We have almost 3 million people. It's crazy. Just the idea of it, like that we click on a button, code gets pushed to 3 million people, and they see something new on their phone just because we did this, right? Like it's like you're impacting people's life in a way, and it's very interesting. Very other than tech and apps, it's very hard to actually reach so many people and change your life in an interesting way, right? So that was quite exciting.
Does that idea of impacting people drive things you do outside of work at all?
On a small scale, I don't think it's like I want to change the world and all that. But I love like, working with, younger founders or whatever, like, helping, advising, like it's something I really enjoy and I like. But it's not something that I've done in a structured way where like I set up this thing or I do stuff like that.
Maybe that's part of the next thing.
The next, who am I?
Who you want to be.
Yeah.
All right. And so I've heard you in another podcast where you said something not very nice about consulting.
Which one?
But at the same time, when we were talking about the different parts of your career, you also said that a lot of what happened in consulting stayed with you. What is it from your time in consulting that stayed with you that you found useful?
A lot, to be honest. Like, so consulting was my first job. And I honestly think it gave me things that changed me forever. So one, it gives you the work ethics that very few other jobs give. It gives you the professionalism that you learn there. And that stays with you. And the fact that, you come with that and that mindset and like, I think really sets you apart from other people who don't have that in the world. Also, it gave me a really broad view on the business world. Like within 1 year, I did a project where we literally went from setting a strategy to a marketing plan to literally writing the HR manual for a company. Like I wouldn't have even known there's an HR manual. Like if I didn't do that in consulting, right? So I think it gives you a very accelerated view of business. It teaches you how to really ramp up and get up to speed on a new industry, new topic that you wouldn't know. And for me, the thing, I don't know if I was like that and it connected with me more or I learned it from consulting, is it really structures your thinking. Like my team makes fun of me because like every time they say something, I'm saying, there are 3 buckets here. So like, but this is how I think now, right? And I think it helps you because then you can categorize things. You can, it's not too broad and messy and all that. So I got all of that out of it. And then some amazing relationships and friendships, which honestly, I worked in multiple companies after that. I don't have 5 friends from Deutsche Bank, I can tell you, right? Like, and with, from Booz, I still have a lot of friends.
No, it's a common theme.
And yeah, it was a smaller company at the time, so it was also easier to connect with more people. But yeah, like feel quite close to a lot of them. Fadi, like 2 days ago, like we had lunch.
Maybe we should start doing like multi-alum.
Yeah, it was
podcast. We have a whole bunch of you.
Like those, the view, the take.
Yes. Round table discussion.
It's gonna get messy, I can tell you.
There's no shortage of A-type personalities.
Exactly, that is for sure.
Right. You also do some investing, or did some investing. Are you a different kind of investor because you've been an entrepreneur? Do you think differently about it?
Yeah, big cut.
From others. In what way?
So one, at least for me, because I was an investor before, I'm an investor after. So it's more about me personally than other VCs. But I can cut more through the crap of what's not very relevant, or vanity metrics. So I know more what's valuable and what's real, and I know more what's hard. So I ask questions about how are you doing that part of it and all that. And I think so that's from finding ideas on it. And we went through a journey. We built a mobile app, we built an e-commerce website, and now we're doing software and AI. Like we've gone through the entire spectrum of almost what startups are, right? So you get an understanding of how all these things work in a very different way. But the other more interesting piece, I think, for me, is I start seeing things from the entrepreneur side, like not replying to an email or replying late or saying you're going to show up for a call and then the associate comes on the call. And when you're negotiating a deal, having your lawyer negotiate with the founder instead of you being small things like that that really have a massive impact on founders. And a lot of VCs, or me at least when I was a VC, I didn't know them, I didn't feel them, I didn't understand them. Because also when you're negotiating a deal and all that, it's ridiculously personal for the founder.
Yeah, because for them, this is everything.
Everything is my life. Well, for you, it's a deal, right? So yeah, but my lawyer, can you negotiate with Tarek? And his lawyer doesn't care, right? I care a lot, right? So then, right now, if I do a deal, I mean, I hope I have the bandwidth and whatever, but I would always be the one talking to the founder, and I'll understand how important all this thing is for them versus just, it's not just terms and it's their life, right? Like, and I didn't understand that before. I mean, you can read it or you can see it, but I really didn't understand it.
Interesting. Maybe we should talk to the ones you're investing in and see how they actually. Right. Switching a little bit in terms of tax. You've been sort of, as you said, you used AI when AI wasn't cool, and you're obviously it's becoming a much bigger force in our society, in our business and economics impact and personal impact, jobs, those. But from a positive perspective, where do you see this wave of technology taking us, not only in automotive, but in the areas that you've been exposed to?
Question. So one thing I read or heard in a podcast or something that I thought was very interesting is they said up until now, most of the software we've been developing was built to enhance our performance, right? It makes 20% fast, 20% faster, 50% cheaper, whatever, right? Now with AI, we're getting to a place where it's not just percentages anymore, it's multiples. Like you can go into like 5x. What you do, I can do it 5x or 100x, right? So suddenly you go from targeting the IT budget in companies where, okay, what's the IT budget? This is a SaaS company, I'm going after that. To now you're going after salaries, right? And I don't mean it in a bad way because, where humans will rise, they always do better stuff, right? But you're going after salaries, and that's an $8 trillion industry for the first time, right? So you're not going after the 1 trillion IT budget, now you're going after the $8 trillion salaries budgets. And that is a massive shift in what you're looking for and what's going to come in the future years. For us, I found two things that I think are interesting. They're interesting from an automotive perspective, but I think they apply to other things. So the first one, so we build these AI chatbots that are sales advisors, customer support. They do everything for the dealer. They're integrated into their system. They can sell you a car, book your test drive, do all that kind of stuff. And one interesting piece now, we're building something, it understands where you are on the website and what you've done before, okay? So you can be looking at a car and you're looking at a white Audi. It would come, the bot would proactively come and tell you, great choice with this Audi. We have a special offer on the service packages this month. By the way, there's like 6 cars similar to that on Dubizzle that just got sold last week, and that was the price. So it's actually a hot moving car. I think in 3 years, we can resell it for this amount and whatever. And suddenly you're getting value in a way that you never got when you're shopping, right? Like, so I think having these agents join you on your shopping journey as an assistant on the side is going to totally change shopping. Like right now, I was in a conference maybe like 8-9 months ago in Amsterdam, and they showed one of the biggest websites for cars is called AutoTrader. And they showed the website of AutoTrader from 1999 and 2024, 25 years difference. Same identical filters, make, model, mileage, year, price. Hasn't changed. But people don't want to search with these 5 things. I want to say we had a guy, literally an actual client, or one of our bots, who's like, I want a car with 9 cup holders. I don't know why. He wants 9 cup holders, right? You should be able to say things like that and find what you're looking for. And I think having that, I don't know what you want to call it, like that concierge or helper with you on a website, guiding you, asking questions. Right now, at some point I wanted to buy one of those carry-ons where you can put the laptop in it. I find one I like. I'm like, will it fit my laptop? I don't know. Like I found a big one. Like, this fits my laptop for sure, but would it fit in the overhead compartment? And I couldn't tell. I went on reading all the reviews on Amazon, hoping to find one of them that talks about if it fits, right? I wish there was a bot I can just say, does it fit in the thing? And you get an answer in seconds, right? I think it'll make shopping different and much more, personalized. Because right now, also the websites you land on, they're the same websites for every single person. But the chat, what you see in the chat, what you get, is going to be very personalized to you. So it's almost like the website becomes dynamic for each customer that lands. And I think that's quite exciting.
I think we're hearing the idea of the next startup.
The next startup, yeah. So this is one side that I think is cool from an AI perspective. And the second one is more software related. And really, if you think of software at its core, it's really a database plus some triggers and rules, like send an email when this happens, do this when that happens, right? That's really, to oversimplify it, this is really what it is. So there's no reason to have software anymore if you can have these AI agents where you just say, record an online order for Tarek for this car, and this is the trade-in he's giving, and it just happened. Do I really need the software where I drag and drop and click and move and whatever? Like, I don't. And it knows by itself to send you a follow-up email afterwards and all that. So I think SaaS in general is going to change over the coming period, and it's not going to be the same structure that we're used to or interface that we're used to.
Yeah, I was going to ask you about that because we have the CEO of Microsoft saying SaaS is dead because now we have agentic coding, so SaaS is going. We have others in the industry trying to basically get rid of the mobile phone by making sort of an AI-backed voice the main interface. We have that. We have then in the automotive world, everybody saying, well, car ownership is going to disappear, or we're going to go to self-driving cars that you basically just rent, or it's a membership scheme. So all of these three things are existential threats to the business that you're in today. Do you agree?
Yeah, I mean, so we are in the AI side of SaaS. So if it goes away,
We'll do another
we
bit.
are the ones who will take it away, I think, to be honest. Car ownership, I mean, whether you own the car or not, people are still going to make cars and sell cars. Like 6 years ago when Uber and all these guys were going through the roof, everybody said no one's going to own a car. We're still 6 years later, I think it hasn't grown much, to be honest. So I think cars will always be around in some form and they'll always continue to be sold. On the SaaS side, I actually want us to disrupt that. Like, I want us to take it away. And it's one of the things we want to do with this new company that bought us. We want to go in that direction and really take away the software side of thing and make it more like an agent.
So we've gone to the fifth step to jump on now.
To the fifth step, exactly. I don't know. I mean, I think there's 12 steps. So it's a lot. It hurts a lot when you get to step number 10.
Somehow that seems to be what's driving. See how far you can go before it starts becoming painful.
How are these steps?
But I'd like to close a little bit on something a bit more personal. You told me that you're a person who reflects a lot on things, and that you have a notebook, or I don't know if it's a digital or physical notebook, but where you write down lessons that you want to pass on to your son.
Yeah.
So I'm very curious if you were to pick the most interesting ones that you would want them when your son. What would they be?
I have to check, sorry. Like, so I have my son Jude. Like, every time I think of something, I write it down. I'm like, one day I'm gonna. He's 11 now, so it's still some time. But like, one day I want to give him some of these things, and they're in no particular format or order. Some of them are my thoughts. Some of them are things I hear or read. Let me tell you a couple. So one is, a lot of people say it's not about the destination, it's the journey, and that's what matters. And obviously I believe in that a lot. But I think there's even a step further. I think it's not even about the journey, it's who you become in the journey. Because if you're just experiencing the journey and you're not taking something out of it that changes you, it's nice, you're experiencing life, but you're not maximizing what you're getting out of that journey. I think the person you become at the end of that journey should be the goal, not just going through a journey or a destination always. This is one. Another cool one, I think, it's quite harsh. Everything's your fault.
Ouch.
So
That's the lesson you want to give your son?
I'll tell you what I mean by it. So like every half decent manager, like you don't have to be like even the best manager. Like, I used to take responsibility for my team. Like, they mess up, I'm like, okay, it's me. Whatever. But in my head, I would say, okay, like to the senior guys, I say it's me, like my responsibility. But I go back to the guy and say, what the hell, man, you messed up. And in my head, I'm like, oh, that guy was an idiot. How can he make that mistake? Whatever. Then I read a book called Extreme Ownership by some ex-Navy SEAL guy. The book is not great. It keeps repeating the same thing. But that message was, everything's your fault. So even that guy who made a major mistake, he's not an idiot. It's your fault. A, you shouldn't have hired him. B, you could have explained more to him what the role is, and then maybe he wouldn't have been a match. 3, maybe you should have trained him better. 4, maybe he shouldn't have been the guy on that project. You should have picked another guy. If you go down that route, then yeah, it is my fault. Like it's not his fault. It's actually, and everything is my fault. And I think if you take that level of extreme ownership, it really changes the way you think about things. And it makes you a better manager, leader, and all that. And yeah, and accountable on all these levels. So that's another one. Give you one last one, maybe. This one is cool. I read the quote once from the ex-founder of Spotify. It said, the value of a company is the sum of the problem solved. And I think it's the same at a CEO level. Like the value of any CEO is the sum of the problems they solve along the way, right? Because half of your time, you're just sitting there. You're like a 911 line. You're just waiting for someone to try and solve a problem, fail, and bring it to you and say, okay, here you go, solve this one. And then the more of these you do, that's the value you're learning, but also that you're adding to the business and the company.
Do you also have a daughter?
I have 2 daughters, Naya and Karma. Yeah.
Are you going to pass the same messages to the
I
daughter?
will. They're just younger. It's not like boy-girl thing. They're just still younger. One is 5, like that. Extreme ownership. It's your fault.
That could be an interesting parenting experiment.
Exactly.
Tarek, it's been a pleasure. Thank you.
Thank you. Thanks for having me. That was fun.